So like I said, we are keeping our system simple and stupidly simple, let me put it that way. It doesn't have to be complex. As a matter of fact, we don't even want it to be complex at all. We want it to be as simple and straightforward as possible. Now, having said that, let's take a look at what the chart tells us and what our system or trading system looks like. Okay, I need to start my chart. So let's go to MT4 now. I'll be using MT4 for tonight, but everything we do tonight, you can still do it on MT5 as well. So I'll be using it, but I'll be using MT4 for tonight.
Sir, why not you use TradingView, sir?
I'm not a fan of TradingView. TradingView has limitations unless you have a premium or you're using a premium package. Besides, even anything you can do on TradingView, I can do it on my MT4 too. So what's the point? So I'm not really a fan of TradingView like that. So let me just put it that way. I'm not a fan of TradingView. I'm more comfortable working with the MetaTrader platform, and there are no restrictions at all. So TradingView gives me some level of restriction, even though it could be flexible in some areas, but some areas where I actually need it to be more smooth is not really smooth for me. So that's why I don't really use TradingView. So I prefer to use MT4 or MT5 as the case may be. Alright, so let's get it started. My MT5 is up now. I mean, my MT4 is up now. So I'm just going to share my screen now. If you can see my screen, please raise your hand. Awesome. Okay. All right, thank you. Put down your hands. That's you said? Okay, that's okay. You can put down your hands now. That's enough. All right, so I believe that if you can't see my screen, must be your network. So please try to connect, disconnect and reconnect again. Maybe you'll be able to see then. So I'm looking at gold at the moment on 5 minutes, and I use right now I have moving averages only on my chart and RSI. Now there are two major systems that I use to trade. The first of them is the moving averages. Okay, I use the moving averages as the first thing that I will use, apart from price action. Price action is constant for me anytime I am trading. Price action is constant, but then I like to complement price action with moving averages. And then secondly, I also work with RSI to an extent. Okay, to an extent. Now let's take a look at the chart on a bit of a higher time frame. So I like to use 1 hour time frame. Okay, now on the 1 hour time frame. Okay, now the first thing, let me take it from the beginning. The first thing I want to look at is what direction is our market going. Are we in an uptrend or are we in a downtrend? And I will start that from a high time frame, like from a 4 hour daily or weekly. Now when I go to the weekly chart, on the weekly chart I can see that we have an obvious uptrend. However, this uptrend just hits a very significant zone. This is where the price is right now. The uptrend has just hit this zone, which is a very significant zone. How do I know that it's significant? Take a look at it here. Sorry. Now, the price tested the zone here. You can see that. Let me change that color.
at your screen. So you're only looking at you. That's what you're doing on the screen.
You're only looking at me.
Yes, so you're only seeing you on the video. I'll see your computer screen to see what you're trying to do.
Is there anybody else having that problem? If you cannot see my MT4 chat, raise up your hand.
I can see your screen. I can see your screen.
Exactly. So, Eze, you might need to disconnect and reconnect to the call. Leave the call and join again. I think it's your network. If you can't see my screen, please leave the call and join again.
I've done so, and it's still the same thing.
Alright, let me stop sharing and start sharing again. Maybe that will help. How about now?
Yeah, I can see your screen, sir.
Alright then, let's continue. Okay, thank you. No wahala. Okay, so now I said we have a significant zone here that has just been hit. Now this zone is significant because it's been tested several times and it held. At this point it was tested and it held. Like that blue. Let me change my background. That background is not helping at all. Okay, I think it's better this way. Now this zone where I have my red horizontal line has been tested several times and it held up. The first time it was tested, let me go back in time and try to see where it was first tested. Long before that current period. Okay, it looks like this is the first time price has ever gotten to that point. Okay, so it got tested here and it held. The price rejected it at that point. When I say price rejected something, I mean a point, it means that even if price closed above it, a new candle did not open and close above it again. If this is broken, a new candle would have opened above here and continued up and closed above it again. That is when I will say it is broken. For instance, before I can say this, look at this 50 moving average at this point here. I told you this is a break. It was broken here. Why? Because this black candle here opened below the 50 moving average and closed below the 50 moving average, and immediately after it another candle opened and closed still below the moving average. Then this means that we have fallen, price has fallen, has broken this moving average now. So I would expect it to continue to respect that, and the only reason why it stopped respecting it was because of a stronger zone, which is the 200 moving average, that made price reject at this point and started going back up. But that notwithstanding, is still coming back to it to keep testing it over and over again. So price just hit a very significant zone right now. So I cannot say categorically that it's going to continue the uptrend or not. However, if I take a look at my fundamental news, and the fundamentals tell me that there is any reason for price of gold to continue to push up, then I would know that the uptrend is going to continue. But as at now, as it is right now, we have a very strong uptrend, and it is embodied in these two candles that you see here. Take a look at these two candles here. They are very, very significant. These two candles, the last two candles that we see here, they are very significant. What do I mean by that? The price action. This is called a hangman or a hammer. This hammer is a strong indicator for an uptrend. That is why when you see it here, you expect price to continue to go up. When you see it here, you expect the price to continue to go up. Anywhere we see the hammer like this now, we know it's an uptrend, and that's why you see this move up. Now, there is nothing as powerful as price action. It is very, very powerful. When you see the inverse hammer too, you expect price to go in the opposite direction. This is an example of that. This is an inverse hammer standing upside down. We expect price to continue to go down because the hammer is pointing down. When the hammer is pointing up like this one, we want price to continue to go up. I know of people who only trade this price action, this candle. Anytime they see this candle, that's the only time they will enter the market. If they don't see this candle, they will not enter the market. That is how significant that is for them. And when they take those trades, most of the time they hit their take profit. Most of the time they hit their take profit. It is very unlikely that that candle will form and you will not go up at least 40 to 50 pips before price comes and breaks below the candle, which is at somewhere around here. So if I see this and I enter immediately after this now, even if price pulls back, I'm expecting it to go up a minimum of 40 to 50 pips. Take a look at that. This is 197 pips. As a matter of fact, 205 pips before it started falling again down to this side. So price action is very, very powerful. You need to understand candles. It's very, very important. You need to know the kind of candles you see. If I was in a buy, say I am buying up, and let's say I buy from somewhere around here, and price gets to this point, and I see this candle form, this very candle go up like this and come back and close at this point, I will just take a look at my RSI and see where my RSI is. And as it turns out, my RSI is telling me that I'm already overbought, already above the 70 zone. I will close my trade at this point immediately, because I know that every time this candle comes up, something weird happens in the opposite direction. It doesn't mean that we immediately jump into a sell. No, I will close the buy first. Then I will watch for when another candle will come up that tells me that price is going to continue down. Then I will go in at that point. So we need to understand candles. Now, I said we have a strong uptrend because we have a hammer that just formed at this end here, followed by a Marubozu. This is almost like a Marubozu anyway, not entirely one, because it has a very small wick at the bottom and a very small wick at the top. But that notwithstanding, it's a very, very strong bullish candle. After this hammer, I would expect price to continue to go up. However, I will trade very cautiously at this point because of this zone. I will not want to risk it because of this zone. So I will wait for price to break above it, come back to retest it, and then continue up before I take a buy. I don't want to answer any questions now. So if you are raising your hand because you have a question, you're going to have to wait a little longer. Okay? So just hold on a bit for me. So I hope you understand what I'm looking at now. So the first thing I want to see is the direction of the market. So if I was trading gold today, and if today was Monday morning, like, of course it's going to be Monday morning in a few hours, the Monday morning I take a look at the chart and this is what I see, I will not take any trade, at least not from here. What I will be looking at is to go to a smaller time frame now. So if I come down to 4 hours and I still see that I have a very strong uptrend, however, see the zone I dropped at the weekly, it's still very significant at 4 hours. Price is still there and falling back from there. I want to wait for price to pull back to some, at least significantly down, because there is no permanent uptrend. When you have an uptrend, somewhere along the line there will be a pullback, what we call a pullback on a retracement. With this kind of 1, 2, 3, 4, 5, 6, 7 continuous bullish candle, I am expecting a strong pullback. So I am expecting a strong pullback. And another reason why I'm expecting a pullback is that price has pulled far away from my 14 moving average. So the second thing I am looking for is the moving averages. What is price doing around the moving averages? If there is a significant activity around the moving averages, then I would make a decision based on that. But that decision will be based on a smaller time frame, say a 1 hour time frame, for instance. We already have a rejection on a 1 hour, rejection, and it pulled back a little. It continued back up, it's still rejecting. But I want to wait, personally, I want to wait for my 14 moving average to either magnet the price back to it or to cross above this zone before I start buying again. Alternatively, if I want to make a sell, I want to wait for price to pull below the 14 moving average and start coming down before I make a sell. Someone is asking if I'm recording. Yes, I'm recording. But that doesn't mean you should leave the call. I want everybody to stay so you can ask your questions and I can answer them, because if you watch the recording, I will not answer questions in the recording. Take note of that. And then you cannot guarantee that the recording will continue till I don't know, till the end of the training. The recording might break anyway. I don't know the future. I can't see the future. The only feature I can see right now is this training that is going on live. I don't know what will happen to the recording. I could finish recording and the system will crash and I won't be able to, convert it and upload it and compress it and upload for you. Alright, so having said that, so the first thing I said we are looking for is the direction of the market. We have an uptrend established. The next thing we want to see is our zones. Now, there's one thing I always like to do when I am marking zones. It's very, very easy to mark your zones. This is one of the easiest way I mark zones. Let me take a new chart. I don't want to use a chart that already have a lot of activities. As a matter of fact, I'm going to remove everything on that chart. Let me just bring in a new chart. Let me take Bitcoin. Okay, so this is a completely plain chart now. So I think I can work with this better. Change it to black and white again so that you can see it well. Okay, this is good. So let's switch to candles and increase the size a little. Okay, better. Now, what I want to see when I am looking for my zones, when I say zones now, I am talking about what's it called? Support and resistance. Okay, support and resistance is the first thing that you want to pay attention to before we begin to go deeper into, let's say, supply and demand and so on and so forth. But for support and resistance, if you want to mark support and resistance, the easiest way to mark it is just find any point that price turns around. When you have a bearish candle and then a sudden bullish candle going up, put the horizontal line at that point. It's as simple as that. Take another line. When you have a bullish candle going up and price turns around at any point, put the horizontal line there too. That's another point. The one at the top where price is an uptrend and breaks and rejects it and comes down, you have a resistance there. Where price is coming down and it rejects and starts going up, you have a support there. It's as simple as that. This is on the 1 hour chart. However, one easy way of finding support and resistance, okay, for a novice that doesn't know anything at all, is to go to a larger time frame. Say go to a monthly, for instance. Now I'll go to a monthly and take the current candle that I am currently with, the current candle running now, or the last candle. It doesn't have to be this current one, it may be the last candle. So I would put a line at the top of the last candle. You can see the top of this last candle here. Let me zoom in some more. This last candle here, I hope everyone can see it. I'll put my line at the top of it and put the second one at the bottom of it. That is the high and the low for last month. Now let's switch to 1 hour. Oh, it's so big we can't even see it on 1 hour. Let's switch to 4 hours and see what that does for us. So look at that. We have, or let's make it daily. That was too much. Okay, so that shows us our support and resistance for the last month. In the last 1 month, these are our support and resistance for the last month. Now, if I want to look at the current month, I will switch back to monthly take the candle again, put a line at the top of the current candle, which is where price is right now. Sorry, that didn't drop. And then put another one at the bottom of the candle, including the wicks. Take note of that, including the wicks. So let me work with the current month and not just the last month. Now this is the support and resistance for this current month. If I come to a lower time frame, 4 hours for instance, now it tells me exactly where the support and resistance for this month is. I expect activities to be within this range. Now I could also go to a smaller time frame. If I'm trading on a small time frame like 1 hour, like 5 minutes, 15 minutes, maybe even 30 minutes, then I don't need to do this on a monthly. I only need to do this on a daily. So I will go to the daily time frame. And one other way of making it very easy for you is to use a different candle. Let me show you another candle that you can use. In my indicators here, I will look for what's the name of this candle again? Heikin Ashi. No, not Heikin Ashi. I've forgotten the name of the candle, but let me switch to Heikin Ashi and see whether that can help. Heikin Ashi is really no good for that. Okay, so Heikin Ashi will not help me much. Let me remove it. Alright, so let's just stick with the candle we have. So I would go to a daily time frame for the whole of today, support and resistance for today. I'll take the bottom of the candle and I will take the top of the candle. Now we don't have a clear reading because BTC USD is really not a very typical instrument to work with like this. Something like Euro USD would have given us a better result. Let me see. Would have given us a better outlook than that. So let me work with Euro USD. Take the bottom of the candle and take the top of the candle. I have drawn my support and resistance for that 1 day, which means I can now go to a smaller time frame of 15 minutes, 30 minutes or 1 hour and begin to target within that zone. You can see price rejecting off those areas. So as price is rejecting here now, I'm expecting price to continue down to somewhere around here before it can either break it below. Before it can either break it below like this, I don't want it to raid. Okay, before I can break below like this, go back and test it again and then continue down. So that's simply what we are expecting price to do. So because of that, I would now be waiting for price to continue from where it currently is up here down to somewhere around here before I can make a decision otherwise. So with this right now, price has been here, it has rejected, has been up there at the resistance, it has rejected. This candle tells you that we have a rejection here. So we are going to have a selling candle even though we have a pullback. If I now bring in with this now, what I'm looking for is a moving average. It's as simple as that. The next thing I want is a moving average. So I just bring in my moving average. Either you're using mobile device or a PC, it doesn't matter. Starting with a 14 moving average. 14 moving average is the closest to your price action. I always use red line for that, and I use very thin line. 14 moving average exponential, that's what I always use. It's smoother for me. Some people use simple moving average, but I prefer to use exponential. So if I put that now, price has pulled back to this and is rejecting. What I'm waiting for is for price to break below the 14 moving average and continue down, then I will sell down. If price continues to stay above this 14 moving average, then I am looking for opportunity for to buy, but all that will happen only above this high. It has to break this high before I can buy that. So you want to check price action, you want to check what candles are doing, you want to check your zones, significant zones, either support or resistance, or either supply or demand. Now supply and demand is a little bit more tricky than support and resistance, and we're only covering that in our mentorship program. So for those who are in mentorship, lucky you. With time you will get to understand supply and demand very, very well. So we'll cover it in details later on in the for those who are in the mentorship. But even if you are not in the mentorship, support and resistance still works fine too. It just may not be as accurate as supply and demand, and you may not see very fast actions, because support and resistance will be waiting for price to come back to that very zone, while supply and demand can see, it may not come back to the line, but we'll know when it has finished its activity. So this is how I analyze the market and make a decision on whether I am going to buy or I'm going to sell. Peace in Arch. Peace in Arch, is this your first time? Did you go through the free training? You can unmute yourself and answer my questions. Can you hear me? Peace in Arch. Can you hear me? If you cannot answer, if you cannot speak up and let me hear you, I don't know how I can help you then. So I'm just going to have to continue.
I think she just said that where she is very noisy.
It's noisy.
She just dropped a message.
Okay. But you can answer the question even with typing. Did you go through the free training on the Blue Pip Academy website? You can just type your answer. Let me know. If you didn't go through the training, that's why you have issues. And they are not supposed to even be in this call at all. If you didn't go through the training, you're not supposed to be in this call at all. Are you a mentorship student? Are you a mentorship student? How did you get into this call then? I'm not even sure I've ever come across this name in any of my trainings before, so I'm really surprised to have you in this training. Okay, you know what you do for me? At the end of the training tonight, send me a message on WhatsApp. At the end of the training tonight, send me a message on WhatsApp. Let me see where we got it mixed up. You're not supposed to be in this training. This training is not for you. It's for people who are above your level, and that's why it's looking like rocket science to you. All right, so let's get back to it, guys. So now we have the first thing I need you to do is to go back to the Blue Pip Academy download page and download everything you can find on Candlestick. Everything that I uploaded there about Candlestick, download all of them, including the Forex Bible. Forex Bible has some very rich resources on candlesticks too. Download everything. Sit down and study candlesticks very, very well. Do you know the funny thing is that there's one branch of technical analysis in Forex trading that is called Smart Money Concept. The Smart Money Concept is simply based on zones and price action. Simple. If you see a Smart Money Concept trader, you will not see indicators on their chart. It's going to be a blank chart with no indicators at all. No indicators, no objects, nothing at all. Their charts look exactly like this. Nothing. This is how a Smart Money trader chart looks like. And with this kind of chart, they make trade decisions, and let me not say they, because I am also a smart money trader, and we make very rich results, get very rich results from our trade. For instance, let me give you an example. If I was trading smart money on this chart right now, you that is trading supply and or support and resistance will be waiting for price to get to this point to make a decision whether it has hit a support or resistance. I, on the other hand, would have my zone around here to tell me when price has come back to the zone. While you are waiting for price here, I already took a buy around here. So while you are waiting for me, I already put in my pocket how many? 55 pips in trade. So smart money is actually a very rich concept that is based on supply and demand. That is one of the reasons why supply and demand is one of the most powerful concepts in forex trading. It just gives you an idea where the momentum comes from. When you see momentum in the market, you ask where it comes from. That is where it comes from. So first I need you to go and study up on candlestick. Understand every single pattern that the candle makes. When you see a head and shoulder pattern, you should be able to identify it very easily. When you see a double top, you should be able to identify it very easily. When you see an M formation, you should be able to identify it very easily. And most of the time, it may not look exactly like that. If I tell you this is an M formation, you may not believe it. Let me get my marker. If I tell you this is an M formation here, you may not believe it because it doesn't look a lot like M formation. If I tell you this is an M formation, it may not look like it too. Sorry. Undo that. If I tell you this here is an M formation, you may not understand because it doesn't look like M. It looks like somebody that has, bad shoulder. But at the same time, this is also an M formation here. So if I was looking at the chart like this and I see this break, I will know exactly what I am expecting this price action to do before it can start going back up. How far it can go down, I will know. This is a double bottom, also known as W formation here. But without looking closely, you may actually not see it as such. Wait a minute, is this line is not even showing on the chart. Whoa. Okay.
Looks like it's not showing.
I just realized that now. So this is a W formation too. Let me increase the thickness of this trend line. So that's a W formation. Goes back up, come back for the second bottom, and then it goes all the way up there. But if you don't know how to find this pattern on the chart, you will not see it. Now, while we know that this is a W formation, at the same time we also have an M formation here too. This is one leg, and this is the second and third and fourth. So if you don't know this, it becomes very difficult for you to be able to pick out patterns. And the patterns are always there. All over your chart, they are all there. Once you're able to find a pattern like that, you can trade it easily. Find a trend line and then trade the trend line. It's as simple as that. Wait for price to pull back to it and follow the price action. That is a trend line, an uptrend. So it tells you that you have an uptrend here on 1 hour. What am I waiting for? I am waiting for price to pull back to this trend line, reject there, and continue up to create a new high. Why? Because price has been forming new highs and new lows all along. That's a new high, a higher high, and another higher high. And when we look at the lows as well, here is a low, a higher low, another higher low, another higher low. So I'm expecting another higher low somewhere around here, but not 100% of the time. Sometimes it may get to this low. Instead of rejecting from there, it breaks below it, retest it, sorry about that, retest it from here to here, and then fall finally down from there to the next zone, which is somewhere around here. I hope this trading is making sense to somebody here.
Yeah, sure. A lot, sir. Yes, it's making sense.
Okay, so now this is when you're working with just the price action. You can see it's very, very easy to be able to, to a reasonable extent, predict what the market will do when you look at what your chart is doing. I'm going to remove all the objects quickly.
So which time frame are you using? Is it 1 hour?
This is currently on 1 hour, but you can do this on any time frame depending on the kind of trader that you are. Remember, a scalper will not be analyzing on weekly and daily and monthly. A scalper will be analyzing between 1 hour, 5 minutes to 1 minute. So while on the 1 hour, it's telling me I have an uptrend. If I check the 5 minutes, what I have is a downtrend. Can you see that? Though it's an uptrend though, but currently we have a downtrend that is just building up. It just rejected off the downtrend now, and it's about to start another uptrend. So it just rejected. It's going to pull back to this and then continue up maybe, or reject completely and continue down. And if it rejects completely and continues down, then what we have becomes a head and shoulder pattern. What we have becomes a head and shoulder pattern. This is the head, this is the first shoulder, and this could be a second shoulder here, or you can take this as the second shoulder. So if this is the second shoulder, I'm expecting something of this magnitude around here as well. So I'm expecting the price to come down to somewhere around here, which interestingly enough, is a very significant zone too. You can see that by the rejection here, the rejection here, the rejection here. I mean the activities here, the rejection here as well. So you can, to a great extent, predict what the market is going to do. However, whatever you do, don't be a how do I put it? Don't be a farmer, be a hunter, or be a fisherman when you are in the market. A farmer, when it is harvest time and they want to harvest everything in the farm completely. They want to remove all of them. They want to make sure that they get everything out of the out of the farm immediately. A hunter doesn't work like that. A fisherman doesn't work like that. A fisherman will go into the ocean. There will be billions of fish in the sea, but the fisherman will catch as little as he can and take it and go and sell that one first. That is what we call securing. Secure some of your profit. So even though I know that this price action may run this, when the price finally move, it may go 19.7 pips. This is on 5 minutes anyway. Or if I'm looking at the higher time frame, and I know that when price leaves here, it's going for, let's say, somewhere around here, which will be my TP3, and I know that price will go from here to somewhere around here, which is 112 pips. I would not want to target the entire 112 pips, because before it gets to that 112 pips, there will be a lot of ups and downs that will give some people a heart attack. Instead of that, I will break my target into pieces. First one somewhere around here, second one somewhere around maybe here, excuse me, second one somewhere around here, which is another significant zone, and finally I will now target this top as my third take profit. That way, when I get to this point, I can take all my profit and rest. That's how many pips. That's some very good position too. 34 pips or 35 pips, 36 pips. That's good enough. If I have enough capital, I can take two positions, 35 pips for TP1 and 76 pips or 75 pips for TP2. If I have a lot more capital than that, I can take three positions, 35 pips for TP1, 75 pips for TP2, and 116 or 115 pips for TP3. That's how we trade the market. So I will not take one position and then sit down and be waiting for it to go and hit 116 pips. It can take 3 days or 4 days. I don't have that kind of patience. I don't advise any of my students to do that. It's a waste of resources. Instead of that, what I would do, if I was trading this and I know price, look at what I would do here. If I was trading this and I know that price is still coming to this place, which I know this price is going all the way up here. What started from here, this is a very strong zone, is going all the way to this zone too, as it is going. That's 225 pips, which I know. But I will not take my first trade and target 225 pips. I will take the first trade and it will run from here and start going up. The moment I have a pullback to this point and it rejects, I will take my second trade and start running it from somewhere around here and continue up. The moment I have a pullback again to this zone and it rejects, I will take my third trade from somewhere here to this point. If I was in this trade from here, right now I have 3 trades running consecutively. But because I always take double position each time I'm taking a trade, I will have 6 trades running right now. And this pullback that is happening, when it ends somewhere around here, I will take another position from somewhere here. Excuse me. I will take another position from somewhere around here and trade it all the way up to here. It will most likely reject from here and come back down. Then I will enter another position from here and all the way up. By the time I'm finally hitting my last TP, if I am holding on my positions, I have 10 trades running right now. This will be 200 and something pips. This will be almost 200 pips. This will be about 180 pips. This will be about 150 pips. This will be about 70 pips. At the end of the day, I'm going home with more than 2,000 pips. Where you are targeting, excuse me, where you are targeting only one trade and expecting to make 216 pips. You have to trade the markets like a fisherman or like a hunter. I don't know who is just joining this call by this time when we're about to close. So now that is one way to trade the market. However, another thing I like to do is to trade with indicators. When I trade with indicators, here's how I trade it. On 1 hour time frame, I have 3 indicators, 3 moving averages. I use only moving average and RSI. Those are the only indicators I use. I only use what's it called, Fibonacci to check for retracement. Other than that, I am trading moving averages all the time. So I have 3 moving averages. This is the first one, 14 moving average. I talked about that before. And my next moving average will be 50 moving average, and still exponential. My color is usually blue, and I will make it thicker than the 14 moving average. My second moving average is the 200 moving average. I will make the color gold or yellow or orange depending on how I'm trading, and I'll make the color, the lines way thicker than the others. Now with this, what am I looking for? I am looking for price to break, for the smaller moving averages to be above the larger moving average. That means I want 14 and 50 to be above 200. The moment I have 14 and 50 climb above 200, what's the next thing I'm looking for? I'm looking for price to pull back to 14 moving average, then I will buy. When we are above the 200 moving average, we are looking for buy opportunities. When we are below, we are looking for sell opportunities. But even when we are above, I want to be sure that 14 moving average is also above the 50 moving average. If the 14 moving average is turning around to come below the 50 moving average, you don't want to buy at that point. Take a look at this. When 14 moving average is consistently above 50 moving average, you can buy because price is still going up. But the moment the 14 moving average starts turning around, coming down and crossing over the 50 moving average, if you buy at this point, you will hit your stop loss or blow your account because price is selling. You see it crossed below, and then we have another cross happening above here. I don't want to trade these two. I will wait until the two of them come above the 200 moving average. Then I look for price to pull back to 15 moving average, 14 moving average, which is what happened at this point. Then I will buy. So if I bought at this point now, I will be buying up to this point. Now, for a beginner, I don't advise you to begin to target specific zones. Like, okay, price will get to the next resistance, target the next resistance. No, don't do that. Target a specific number of pips. Start with 10 or 20. Once you hit 20 pips, let it close the trade. So set your TP at 20 pips. If I buy at this point now, 20 pips will give me somewhere around, it's even very high. 20 pips will give me somewhere around here. This point here. This is it. This is 20 pips here. That is the bottom of this line here. You can see that the distance is not much. From here, let me change this color to blue. From here to here is where my trade went to. It makes it very easy for you to be able to retain your profit. Sorry. If I was going to target large to this point, you see this pullback here would have scared me out of the market. So just target small, 20 pips or maybe 40 pips maximum. With Euro USD, you can target 40 pips easy. So this is 40 pips here, 44. This is 40. So I'll be targeting somewhere around here. It's as simple as that. Take that little profit and get out of the market. Let the market do whatever it wants to do. What am I waiting for again? I'm waiting for price to pull back to this 14 moving average again. And when that happens at this point here, I take another buy. When that happens at this point, I take another buy and target another 40 pips again. Wait for price to pull back again. It happened at this point. I take another buy again and target another 40 pips again. That's how you trade profitably. And then when it finally hits that zone, you want to wait and let a proper sell set up for you. So from this point, you will not take this trade. It's risky. You will not trade at this point too. It's risky because anything can happen when the three of them are together like this. Until they are separated, that's when you can be certain. Take a look at every time they are separated. Look at the separation here. The moment the three of them separated and 14 and 50 are below the 200, see what happens. It just kept going down. Every pullback will give you some very good profit. Another pullback here will give you some good profit. Another pullback here to this point gave you some good profit. Just take a look at that. Pull back to 14, sell down. Pull back to 14 again, sell down. Pull back to 14, sell down. It's as simple as that. Because you are below 200. The moment you break above 200 or it begins to pull back to 200, stay out of the market as a novice. If I was still trading, I could still trade in this place. But you don't risk it. I hope that is clear enough. Now we have at least 2 strategies that we have discussed in details today that you can practice with in the course of the coming weeks. Maybe make some good money from there if you have some capital in your account. Trade on your own. You don't have to always wait until you have signal. I don't want people to rely on my signals. Okay? I'm human, anything can happen. I may wake up tomorrow and God tells me, I don't want you to trade Forex again. I don't want you to trade anybody in Forex again. I want you to go and, do something else somewhere. I'll stand up and go. But does that mean your life has to end too because I stopped the Blue Pip Academy? It shouldn't. So the ultimate for anybody who is in my course, whether free or paid, is to be independent. To be independent. It's going to take a lot of work. I kid you not. It's going to take a lot of work. I will not lie to you. I don't deceive people. Because I don't deceive myself and I don't like people deceiving me. I'm not going to tell you it's going to be easy. It's not going to be easy. There will be a lot of distraction. Most of you here have children. They will distract you. Your family members will distract you. Your wife will distract you. Your husbands will distract you. But you have to resolve within yourself that you have to do this. You want to do this and you can do this. The resources are all there for you, free of charge. You just need to put in the work. That's all. I wish it's possible for me to split your head and put those things inside, but it's not possible. So the highest I can do is what I'm doing right now. It's up to you to take it beyond that. Even though you paid for mentorship, I cannot guarantee that I will always be there or I will always be alive to attend to you. No. Yes, I'm going to be alive. I'm going to live very, very long. I can guarantee that. But I cannot guarantee that I'm going to spend the rest of my life attending to you. No, I will not. I don't want to trade Forex for more than the age of, let's say, 55 maximum. Before the age of 55, I want to retire from all this stress that I am going through training people and trading. I want to be able to retire and rest. So the only way you can continue is to do it for yourself. Don't expect one guru from somewhere to come and put the work there. You say what?
No, 55, you should be resting and be enjoying your money, sir.
Now, that's what I want to do. I'm already enjoying my money now. Then I want to just be resting.
I have a question to ask, sir.
Yes, go ahead.
So my question is, how do we set? I've been hearing this word. I'm not sure if I've watched it on the last video during the training. That maybe you have taken profit. How do I set even? I've been seeing that for some time now, but I don't know how to set it.
How to set CP?
Even.
Okay, how to break even?
Yes, how to break even. Yes,
Okay, how to set break
like
even?
that,
See, baby. How are you? You want to see you? You want my people to see you? Okay, now to break even, it means that you should move your stop loss to your entry position. That is when your trade is running in profit. You can take your stop loss to your entry position. That is what it means to break even. For instance, where am I? Euro USD. Let me go back to BTC USD. Now, if I was in a buy position here, let's say I bought from, I hope everyone can still see my screen.
Yes, sir, we can see.
Okay.
We can see your screen.
Now, remember my trading strategy. I said I wait for a pullback to the 14 moving average and then I take a buy. Put that in your hands, baby. Put that in your hands. Now, when I take a buy from this zone here, because I have a pullback to the 14 moving average after breaking the 14, you pull back to it at this point. Let me zoom in a little more. You see, price was coming down small, then it broke above the 14 moving average, pulled back to test it and rejected. Once I see this rejection, I'm waiting for this candle to close and the next one opens. Once the next candle opens, I am buying from this point. So let's assume that I bought from this point here. I will be setting my stop loss here. That's where my stop loss will be. Now, I may be setting my TP somewhere around here, and price is already going there. Now let's assume that, let's assume that my TP is not here, my TP is up here. price is already going there. Now when price leaves here and goes all the way from here, excuse me, one moment please, I picked the wrong tool. So when price goes all the way from here where I entered to somewhere around here, which is giving me about, let me see, Enebeli Charles, we need to talk about that, your name, about 52 pips or thereabout. Okay, 52 pips. Now I would move my stop loss from here and set it here. That is what breaking even means. Then if I have a large account that I took 0.03, 0.1, 0.3 or one standard lot, that is a lot size that is divisible, that you can break into multiple, I will close half of my profits. I will close half of my profits here at this point. Then I will move my stop loss here. Reason being that if price decides to stop halfway like it did here and pull back all the way from here, if it pulls all the way to this point, it will simply close me out in maybe 0, and the first profit that I took before, the half profit, will still remain mine. But if it pulls back as little as this and continues going up again, I will move my stop loss again from here to this point. That is the second level of breaking even, also called trailing stop. Trailing stop in my trading, this is what it means. You can also set it automatically on your trade when you are using a PC. But if you are using a mobile device, then you have to manually set those trailing stops. I hope that is clear. Ikoshi, do you understand it now?
Thank you very much, sir.
So that's what it means to break even.
I understand.
Secure part of your profit, then move your stop loss into profit or to entry, so that if price turns around, you don't lose the profit you have made and you don't lose your money. It only closes you in 0. It's called a risk-free trading, and then you can continue after that.
Yes. Okay, sir. Look, sir, my last question, sir. Sorry. Let me
Alright.
ask the last question.
Go ahead.
Now, like for some of us that maybe have like $50 or $100 and we want to start live trade.
Yeah.
Like on the time frame, what is your advice? Which of the time frame do you advise us to use?
It depends on the kind of trader that you are. I can still trade, I can still use a larger time frame and have my trade run for hours or even days if I like. But that will be based on the knowledge that this trade is going to give me so number of pips in profit. For example, if I'm trading on a larger time frame, say on a daily time frame for instance now, and I see this rejection here, I'm trading BTC USD, and I see this rejection here, I would wait for price to pull back like it did here, and I bought from here. I can hold this trade from here. I can hold this trade from here all the way to maybe current position where price is right now without worry, even if I have $100 account, because I have an assurance based on my analysis. And then I could also put my stop loss there to protect my capital just in case price turns around. But whatever happens, I can still trade on a daily chart like this. It's just that I know that this trade might run like this for the next maybe 1 week. I'm holding it. But if I do hold this for 1 week and it goes from this point to this point, that gives me about 357 or 3,576 pips times 10 cents per trade. That is if I'm using 0.01 times 10 cents, that gives me over $350. $350 added to my $100 profit. I think it's worth it if I hold this trade for the next 4 or 5 days. Do you understand that? So it really depends on you, the kind of trader that you are, to determine the lot size, to determine the time frame that you'll be trading on. But the higher the time frame, the longer you will have to hold that trade before you can hit your target.
Thank you very much. I understand. Thank you, sir. sir.
All right, you're welcome, sir. Okay, I think that's about it. Do we have any other questions? So if you have a question, please raise your hand now so I can take your questions. Please raise your hand if you have a question. I'll only call those who are raising their hand. Okay, Bethel, let me hear your question.
Yeah, Coach, good evening, sir.
Good evening.
The question I have is that I see hearing people saying that unity moving averages or some of these mobile data is not the best. What's it called? ICT or whatever price action is the best method of trading. So sometimes one gets confused.
I'm sorry, I didn't hear. I'm sorry, I didn't hear your question well. Can you take the question again and speak louder, please?
I'm saying that some mentors or people who are experts in trading, they are saying that using the moving averages disappoint somebody that price action, studying the movement of prices,
Yes.
and the understanding the movement of the market and using the pure price action is the best. So I don't really know, sir. I want to assist you in that area.
Okay. There is no strategy that is 100% fail proof. Even the price action fails too. And yes, price action is good, but it doesn't mean every other one doesn't work or is not good. I use price action too, but I like to confirm with my moving averages. I've been using moving averages for more than 7-8 years now. Yes, there are times when they give you a false hope depending on the instrument you're trading, but moving averages combined with price action have always given me significant results, very, very beautiful results. And of course, those who are in my signal group can testify to that. All the trades I've always posted have been based on price action. So like sometimes we get it wrong, but even when we seem to get it wrong, most of the time we're actually right, only that we entered a little late, a little too early, and we hit stop loss and still end up hitting take profit at the end of the day for those who are able to hold it. So there is no system that can be pushed back. But what I can say is this: price action is a leading style. That is showing you what is happening live. Moving averages, on the other hand, are calculated based on what has happened already in the past. Do you understand that? So just like in real life, you can use the past to judge what will happen in the future. For instance, a car has never hit you before on the express, but you know that when you are in the express, you will not enter the road and wait for the car to come and hit you. How did you know that? Because you've heard that when car hits somebody in the express, the person will most likely die. That is you using the past activities to determine what you should do in the future. So you don't want to have the experience to know that it actually works or it doesn't work. You can still use what happened to other people or what has happened in the past to you to judge what to do. If you have a certain kind of food that purges you, the first or the second time you ate it and it purged you, I'm sure the next time you want to eat it, you want to be cautious because you expect that it might actually purge you too. So the past could actually help us, but it doesn't mean that we should completely forget about the present or the price action activities. That is the best way to judge what the market is doing right now. But the moving averages have been very, very helpful to me in determining whether the market is ready or not, because sometimes even price action fails. I have a trader who trades mostly on price action. Perhaps I will drop a link to his perhaps I'm not promising that, to his YouTube channel. You can check him out. He's not bad, he's good. He trades price action, smart money concept, so he's a smart money trader, but he has only about 40% win rate, 30-40% win rate. And because of that, every time he's trading, he has very low stop loss target and very high profit target. So that is why most of the time he doesn't hit his target. But he's good with smart money, with the smart money concept. I hope you understand that. So no system is infallible, no system is foolproof or failure proof. Okay, I'm seeing so many hands raised right now. I'm not sure I can answer all these questions. I'll take only 2 questions. I didn't know you raised your hand a lot earlier, so I will answer your question Emmanuel too, I will answer your question. Every other person, please send your question to me on WhatsApp so that I can respond to them. Maybe I'll do a voice note to you then, or I'll drop the voice note in the group. So I didn't know you ask your question, David. David Anozi, are you there? Go ahead and ask your question, please. I'm sorry, I can't hear you. Your line is breaking. Your network is bad. Can you type out your question quickly? Please type it quickly. Emmanuel Ubeyin, let me have your question.
When you ask on the higher time, for example, from the day time frame, and then you want to put the lower time frame. So sometimes after the analysis on the higher time frame, you discover that on the lower time frame, you don't feature the exact thing that you find on the higher time. I want to enter the place on the lower time frame to exactly are you looking for what's the value before you can get to the
Okay. I can hear you.
I want to know, you after analysis of that time before you chat pattern, you all put in the lower time frame before you take it to, or after that, you know, you go at that time or using the chat pattern, you cannot take it to
All right. Now, this is what I do. On a higher time frame, after looking at direction, on let's say on 1 hour for instance now, I have seen the direction we are going. We are in an uptrend. On 1 hour, I'll be waiting for price to pull back to the 14 moving average, which is what this is doing. Now, I will make my entry on a smaller time frame of maybe 5 minutes or 15 minutes. What am I looking for at that point? Sorry, I have a disconnection here. Can you still see my screen?
Yes, your screen is off, sir.
I thought as much. All right, let me I got disconnected. Let me quickly reconnect. Okay. I believe you can see my screen now. Okay, good. So now, having seen where the price is going on 1 hour, that I'm waiting for a pullback, I will wait until this pullback completes. Is either it gets to 14 moving average, or this candle closes anywhere it closes while it is coming down like this. The moment I see a bullish candle form now, then I will go to a smaller time frame and confirm that that bullish candle is actually showing me a bull trend here. That is, right now it's showing me a bear trend. The market is coming down, but on 1 hour the market is still coming down too. So the moment I see it get to the end of this trend here, because if you enter at this point, see the problem here, if you enter at this point because you have a pullback that is rejecting, this price could continue to pull down until it gets to 50 moving average here. And if that happens, 50 moving average on 5 minutes or 15 minutes for instance will be where? Let's look at where it is. Can you see where price is? That would have pulled you all the way to somewhere around here. It will probably blow your account. So we wait until it pulls back and finishes that move. If it finish and rejects at 50 moving average, just like this one did, can you see all this pullback until it finally got to 50 moving average here, and then it rejected. When it rejected here, I can now look for an opportunity to buy, and the opportunity to buy will only happen when a candle opens above and closes above the 14 moving average. So I will not buy anywhere at this point. I would buy only after this candle, which is on this candle. So if I buy from here now, I am expecting to buy from somewhere here. Let me mark that place. Maybe we can easily find it on let me change the color so we can check it on smaller time frame so you understand what I'm trying to say. Okay, so now we drop to a smaller time frame. 15 minutes. On 15 minutes, can you see where it is? This rejection at this point now, if you reject at this point and I am buying at this point, look at it here. This was where I said that we are entering it. This is how significant it is here. It pulled back, formed a doji, gave us an inverted hammer. We expect the price to start pulling up. If we had bought at this point, it's an immediate uptrend. There is no negotiating that we are hitting stop loss or anything. That is the power of taking your trade on a smaller time frame. If you are taking it on a larger time frame, you may have entered around here and price will still pull back as far as this place before it now starts going up, or maybe even as far as this place. As you can see, it still came down to this point before it started going up. This would have scared you, maybe even hit your stop loss, because if you entered here, you'll be setting stop loss somewhere around here and it would have hit it with this candle before it started going up. So that's the problem with taking trade on a higher time frame. So even if you do your analysis on a higher time frame and you have confirmed where your entry will be, which is this point, then you want to go to a smaller time frame and make sure that all the noise has finished. All this noise has finished and it has started moving before you actually enter. I hope we understand that now. Alright, now that's about how to take trade on a smaller time. So your entries on a smaller time frame, your analysis are on a higher time frame. Your decision to take a buy on a sell or a sell must be done on a higher time frame. If you are coming to 5 minutes and you now see this is a bull, this is a bull market, a bear market, we have two bearish candles, and you go and sell from this point, you are committing suicide, because it's a very, very small time frame. This thing can go from here to here, and that is just about 7 or 8 pips. Imagine that, just 2.4 pips, and the next moment it just takes off into the skies. What would you do? You sacrifice your accounts for it. So you don't make a buy or trade or sell decision on a small time frame. You make that decision on a higher time frame, minimum 1 hour. Don't even make it on 30 minutes, make it on 1 hour. When you have decided to buy, be sure of where you want to buy from or where you want to sell from. When you have decided where you want to buy or sell from, do you see what I mean now? This guy is still dropping. The guy is still dropping. It has dropped below where it was before, as you can see, and it's still falling. I expect it to pull all the way back to somewhere around here, at least. Somewhere around here at least, before it starts going back up. If you want to confirm that, let's use Fibonacci retracement. Take a look at that. Our 50, you see, just right. 14 moving average is at 50. So I'm expecting a pullback first to 38. You can reject a little, pull back to 50 before it starts going up. I know Fibonacci retracement may be a little bit complex for most people, so I don't always like to dive into it in the middle of a training like this. But this is some of the ways that I try to confirm my entry before I take a trade. So I'm expecting this price to pull all the way to at least 14 moving average or 50 on the Fibonacci retracement chart before I decide to take a buy from there. Most of the time when I do that, I have a winning trade. It's a high probability trade. So this training has gone on long enough, even longer than I projected originally. This is almost 1 hour 30 minutes on this call. So I won't be taking any more questions at this point. I'm going to take your questions in the WhatsApp group. So send me a message on WhatsApp if you have any more questions. Okay. What's that? All right. In the absence of any other question, let me say thank you so much for today. I wish you all the best in the coming week. I wish you a very profitable trading week as we go back to the market tomorrow morning. Yes?
Sir, can we be doing this often, like maybe 2 days or 3 days?
How much are you paying me for that?
I missed you, like the last time was a week ago.
Do you know what it means? Do you know what it means for me to hold this training? This is the time I will be spending with my family, playing with my children. My time is very, very valuable. So unless you are paying me for it, you take it whenever I give it. Usually normally I don't even do this. I only do this with my mentorship students. But I don't know why my spirit just keeps telling me to do it once in a while for everybody. So, and even at that, most people still don't appreciate it. We have over 1,700 people in the group, and only 30 people are showing up for the call. Is that encouraging? Normally that would discourage me. I would not have done this again. Alright, so thank you so much for your time. Have a wonderful night's rest. Let me go and play with my family now. You can all leave the call now.
Thank you so much, sir. I
You're
really
welcome.
appreciate it.
You're welcome,
Thank you
sir.
very much, sir.
Thank you.
Thank you very much, sir. I appreciate it.